Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Today I wanted to go over an article listed in the Financial Post last week saying that a digital currency issued by the Bank of Canada might be inevitable to compete with the rise of cryptocurrencies. There's been quite a bit of talk as of late, especially in the past few months, in the rise of Bitcoin, about what the central banks and the West are going to do about cryptocurrencies. The article in question argues that experts think that Canada needs to get ahead of the game and issue its own competing digital currency in order to compete with the rise of perhaps Facebook's crypto coming out, as well as Bitcoin and blockchain, which is obviously the crypto itself, Ethereum, Dogecoin, etc., etc. There's tons out there. The main part of the article, though, is that the Bank of Canada might have to issue its own digital currency in order to compete with cryptocurrencies. So I wanted to make this video to really try to clear that up as much as we can, because there are some main differences between central bank digital currencies and cryptocurrencies. And I wanted to go over those differences so that we can kind of keep that in mind when we're hearing these arguments from the Bank of Canada and from the government that they need to do so to compete with it. I think it's important to keep in mind that these aren't necessarily valid arguments. But the more we know about the differences between the two, the better apt we'll be. So I just want to go over some of the main differences between potential central bank digital currency as opposed to cryptocurrency, and then go over some of the implications of a central bank digital currency and see what that actually would look like in practice. One of the main attractions to cryptocurrencies is its decentralization, in that it's not controlled by any individual or group or government, mainly government. So when we saw the advent of COVID and the central banks, be it the Federal Reserve, the Bank of Canada, the Bank of England, central banks throughout the world started up the printing presses, meaning they basically just created money. As so much more money was created, the allure of one of the most popular cryptocurrencies, Bitcoin, became greater and greater, as it was seen as something that's, one, not controlled by governments, and there's a finite amount of it. There's only about 18 million and change Bitcoins available. They're still being mined. Not everybody has them yet. But it's a finite amount. So once they've all been mined, then that's it. So it's seen as a better store of value in that you can't just print more of it. Kind of like land, really. God's not making any more of it. So once you have it, it does tend to hold its value. So it's not controlled by the government. It can't be subject to political whims. And you can't just make more of it. Contrast that if we were to have a central bank currency, well, that would be controlled by the government, and that by definition they could just make more of it. Much in the same way that they turn on the printing presses, so to say. They would just simply a couple of clicks of the button and they could create more currency. To a large extent, that's what they already do, but we would actually call it digital currency. When we say running the printing presses, they're not necessarily just printing dollar bills. They are creating it digitally, but we would call this an actual digital currency. So when you hear experts or the Bank of Canada and even probably the Federal Reserve will grow louder and louder, that's the US's central bank. When you hear these groups and these experts say that governments need to create a competing digital currency in order to compete with crypto so that they're ahead of the game, well, they're not exactly being genuine in their arguments, because they're very, very different attractions to both. One with crypto being decentralized, not run by governments. Well, if the government creates a currency, it's obviously centralized and run by a government, it's not going to have the same allure, same attraction to the general public as does crypto. It will just be another currency, just not in paper form. In fact, it's going to have even less attraction than what we see in paper form now. Main reason for that being is that a digital currency can be tracked by the government at at any time. There'll be a digital record kept of every single transaction. So if you remember when you were a kid, when you set up a lemonade stand and you'd get your nickel or whatever it was for a glass of lemonade, well, the government, they'll still let you do that, but they're going to want their tax, but potentially. I mean, it's easy to say that's a slippery slope, but it's definitely possible. Every transaction in the economy will be able to be seen by the government, tracked by the government, and most importantly, to the government, taxed by the government. And I'm not saying that you shouldn't pay your taxes, it's all our civic duty. But this is a fairly large implication by the government, not only for tax purposes, but for also for oversight. They'll know every single thing that you did. Not only will the government have access to this data, other companies will too. It's possible we could see, say, insurance companies changing their rates based off your spending behavior, as all of that data will be relatively readily available to everybody, to all the big companies. So it's scary to think about, actually, but it's definitely something to think about when we see more and more central banks starting to talk about the need for digital currency. It's not just to compete with cryptocurrency. In fact, there's quite a few other implications for it. And most importantly, it doesn't compete with cryptocurrency because it's completely different. It doesn't have the same attraction. It won't have the same support as a cryptocurrency. It's not the same thing. Now, I do want to have another video out about problems with cryptocurrency. As I've been kind of thinking about this for quite a while. There's quite a few issues involved with cryptocurrency operating within a state, within a country, and that those two will eventually butt heads. So I do want to do that video, but that's for a later date. Suffice to say, for this video's purposes, I just think it's a good idea to realize what happens when the central banks are talking about digital currencies. And we're going to see this come out more and more in the coming months, coming years, as central banks and governments are starting to take more notice about cryptocurrencies and their potential impacts. I think it's a good idea to keep in mind, or keep a healthy amount of skepticism towards the arguments being made, as we can see in this Financial Post article, where they lay out the reasons being that the central banks need to compete with the cryptocurrencies. That's not exactly a genuine argument, and it's quite obvious that the two are very different. So it's not exactly a competition when you're playing in two different games. We'll have more videos out about crypto as it becomes more and more important, because it does have implications for interest rates, for the mortgage market, and for the real estate market. So I will have more videos out on cryptocurrency. If you like this video, please do click like and subscribe, and you'll get more updates as they come out. Thank you.